What's up everyone, and welcome back to Explain the Charts. Today, on October 19th, 2025, we are taking a deep dive into an asset that has been on an absolute roller coaster, Litecoin or LTCUSD. We've got a ton of conflicting news clashing with some wild price action, from massive surges to a catastrophic flash crash just days ago. First, we'll cover the news, and then we'll break down what the charts are telling us. The biggest story, without a doubt, is the hype surrounding the potential approval of a spot Litecoin ETF. Several major asset managers like Grayscale, CoinShares, and Canary Capital have applications pending with the SEC. However, the ongoing U.S. government shutdown, which started on October 1st, has frozen SEC operations, delaying any potential decision. This delay is creating a lot of uncertainty, but many analysts believe approval is a done deal once the shutdown ends. Bloomberg analysts have noted that recent filings contain details usually seen right before go time, fueling bullish sentiment. This speculation recently caused LTC to surge over 10%, bucking the downtrend of Bitcoin and Ethereum, with futures open interest jumping 25% to over $1.2 billion. Price targets from experts are flying around, with some calling for $160 by next March and others making long-term calls for $400 or even a wild $750. But the market has two faces, and while the long-term outlook seems rosy to some, the short-term has been brutal. Just over a week ago, on October 10th, Litecoin plunged dramatically, with some reports saying 23%. This wiped out days of gains and reminded everyone just how volatile this market can be. Despite this crash, data shows significant accumulation from investors buying the dip and large outflows from exchanges, suggesting a move to cold storage for long-term holding. Adding to the bullish case is real-world adoption. Coinbase recently launched a business platform integrating LTC for corporate payments, and MEI Pharma, a Nasdaq-listed company, allocated $100 million to its Litecoin reserves, validating it as a treasury asset. So we have a classic battle: short-term fear and volatility versus long-term optimism and adoption. Now let's see how this narrative translates to the price action on our daily chart. Looking back over the past year, we can see this isn't Litecoin's first rodeo with volatility. We had a massive run-up starting in November 2024, taking the price from around $75 to a peak near $147 in early December. That was followed by a sharp correction back down towards $100. We saw another run at these highs in February of this year, which was again rejected, leading to a bleed out all the way down to the $80s. This establishes that the $130 to $140 area is a major overhead resistance zone that bulls will eventually have to conquer. Now, let's zoom in on the most dramatic event of the year, that flash crash on October 10th. As you can see on this daily candle, the price opened around $126 and was trading as high as $136. Then, absolute chaos ensued. In a cascade of liquidations, the price flash crashed all the way down to a low of about $55. This is a staggering drop of nearly 60% from the day's high. But what's equally telling is the recovery. Buyers stepped in with immense force, pushing the price all the way back up to close the day at $97. This massive lower wick signifies both extreme panic and a powerful demand zone in the low to mid-$80s and below. Since that chaotic day, the price has been trying to find its footing. Looking at this recent action, we can define our key levels to watch. Immediate resistance sits around the $102 to $105 level, which was a key support level that failed during the crash. Getting and holding above that is the first bullish test. Above that, we have resistance at $115, and then the big one we mentioned, the $130 to $140 supply zone. To the downside, our immediate support is the psychological $90 level, which we are hovering just above right now. If that fails, the next clear support is the low from the crash, around $84. Below that, analysts are pointing to a potential drop to $76 as the next major support zone. The absolute crisis support remains the wick low of that flash crash, around $55. Let's switch to the 1-hour chart to get a clearer picture of the recent struggle. Here we can see the steep drop on October 10th and the subsequent bounce. After the initial recovery to over $100, the price has been in a clear downtrend. We've been making a series of lower highs and lower lows, which is bearish in the short term. The price has been rejected multiple times from the $100 to $102 area. Currently, we are consolidating in a tight range, seemingly building a base just above the $90 support level. The bulls are defending this area, but the bears are keeping the pressure on from above. Now for the micro view, let's look at the 15-minute chart for the most recent price action. Over the past day, we can see the battle for the $90 level in detail. We saw a dip down to the low $90s, which was quickly bought back up. However, the subsequent rally attempts have been weak, failing to gain any significant momentum above $92. This suggests that while buyers are present at support, there is a lack of conviction to push prices higher at the moment. We are essentially in a tight consolidation pattern, waiting for a catalyst to force a move one way or the other. The volume is relatively low, which is typical for sideways action as the market awaits its next signal. So, let's bring it all together and recap what we're looking at. The long-term narrative is heavily dependent on the spot ETF news, which is currently in limbo. Short-term price action is bearishly biased, but holding onto a critical support level. Let's outline the potential scenarios. The bullish scenario, which I would give a 40% chance of happening soon, requires a strong catalyst, likely positive ETF news. A break and hold above the $105 resistance would be the first signal, potentially triggering a run to test the $125 to $130 area. The bearish scenario, which I'd also put at about a 40% chance, would see us lose the $90 support level. A break below this would likely lead to a quick test of the $84 low, and if market sentiment is poor, a slide towards the $76 support level is very possible. The most likely immediate outcome, with a 60% probability in the very short term, is continued sideways action. We will likely chop between $90 and $102 as traders wait for a clear sign from the SEC or the broader market. To summarize the key price levels to watch, major resistance is at $130. Key shorter-term resistance levels are $105 and $115. On the downside, key support levels are $90, $84, and $76. The main thing to look out for is any news regarding the end of the U.S. government shutdown, as an SEC decision on the Litecoin ETFs could follow shortly after. Watch the volume on any breakout or breakdown. High volume confirms the move. That's our analysis for today. Remember, this is not financial advice. The cryptocurrency market is extremely volatile, and you should always do your own extensive research before making any investment decisions. Thanks for watching Explain the Charts, and we'll see you in the next one.